This is Mark Anthony with Mercury Time Price Analytics with our end of day video for Thursday the 20th for algorithmic day trading and swing trading of ESNQ bonds and crude oil. Well, we're going to talk today about a little bit more than just this chart, but this tells the picture. You had a 50 handle move in about 45 minutes. You had a live pivot here from yesterday at 88.78, and look at the precision on this chart. These algorithmic pivots are unlike anything that I believe exists anywhere, at least on a consumer level. The institutions have something like this, that's great, but guess what? They're not sharing it with you. This is available for individual traders, day traders, swing traders. It literally gives you the kind of edge that the institutions have, and that's who you're competing with. You're competing with the institutions and with their computerized algorithms. We give you every bit as accurate, and I can't imagine anything more accurate than this, but let's talk about what had happened today. So you had this move down last night, and this action last night foretold that something was wrong for a number of reasons. You continue to make incremental new highs with no follow-through. Immediately sold into. Now this high last night came at our Mercury band upper extension at 33.96.87. These Mercury bands are produced every day. We have to wait until the full day is over, including that half-hour period from 4:30 to 5. And then we run these Mercury bands. We publish them for our subscribers on our Slack channel, and then they're overlaid on the chart. So the live chart that our traders see looks like this. And you can see on the right side of the screen our day trading algo, on the left side our swing trading algo. The swing trading algo, it simply runs on a longer cycle. Each one of these bars is a longer time frame than what you have here. But you can see what you had here. We have a number of algorithmic pivots that are right here. And if you've seen any of my videos before, this is what we call an algorithmic hook, where you have pivots where ES comes up. The algorithms, the institutional algorithms, when they don't find stops to run, this is what they do. They come up and they probe for stops. Well, there weren't many there for a variety of reasons that aren't worth going into now, but what you get is moves above these algorithmic pivots that run people's stops, and then you get this kind of move down. And the move down was violent, it was fast, 50 handles in about 45 minutes. On our subscriber Slack channel, this is the short. Now I legged into this short, and you can go on our website, mercurysignals.com, and this is right on the home page. And you can see this chart. And this shows you not only the trade from today, but it shows you the short that we took on Monday at 11:32, and that's right below it. But we've got the live chart that, and the beauty about our service, one of the great things is there's no software to buy. Every day we give you a code. You go to Zoom, and all you need is just a free Zoom account with your email address, and you put in the code for the day. And on your screen, you see the live chart, and you can still see it moving a little bit. It's just a minute before 5 o'clock. But our subscribers see this all day long. They see the algorithm moving throughout the chart. They hear the dogs barking outside. They see the algorithmic pivots, which are the horizontal lines. But let's talk about what happened here. You keep coming up and making these new highs, and it's just a single event, a single bar, and then boom, and again, and we've had this happen for multiple days. You take the chart back, and it's just an isolated high. There is no extension. In other words, you never see a new high, and then the next bar, it extends higher. And so when we called out that trade, and if you go to our website, we actually show you the way this was all typed out in the Slack channel. So first trade of the day at 9:38, short entry at 81 or better. And I put this trade on in three pieces. We legged into it. We don't do that all the time, but when the market is particularly treacherous, as it has been, you don't know whether this thing's going to print new highs. But we did have chart evidence that led me to call this trade out. And we trade in thirds. So the idea of trading in thirds is when the trade starts moving in the direction that's profitable for you, you take a little bit of profit and you adjust your stop. So +4 on the first third of the position, and a little bit later, that trade, we got out of that particular trade, and that ended up being just a couple of handles. After we took the first third, it reversed higher. But that's why you take that first third. You get risk out of the trade very quickly. Now, this was the big one today. Short entry at 88.50, and we legged into this, and then it started to run. So that first third of the trade was 20 handles, and it ended up being 67 handles. And here's what's amazing about the way our pivots work. Look where this started, right up here around 88, between 88 and 89. You literally had a 50 handle move in about 45 minutes, and it stopped in less than 2 ticks from our Mercury band. Now, it started up here at the Mercury band upper level, and that's where it broke, and it came down to the Mercury band lower level. Now, these were published for our subscribers last night, and you had a 50 handle move that stopped in less than 2 ticks. Now, when we run the algorithm, the output is 2 decimals. So that's why you see 33.38.81, and the low was 39.25. So literally less than 2 ticks. Now, here's why that's important. When you've got this level of precision in these pivots, you can take profit very precisely. Now, I took the profit on the last piece a little bit earlier than that. I think it was like 51-ish. It's all right on the website. But the point is, you get into the trade, and then you're legging out of it, taking the profit in thirds. And in this particular case, that last piece, the runner, I broke it up into 2 parts and took a portion of it at one point and a portion of it later. But you take a look at this entire construct. Let's take a look at this picture here. This was the trade entry on Monday at 11:32. And the cool thing about what we do is everything is documented. And I say this in almost every video. Anybody that tries to sell you a subscription to any type of trading service that can't show you this, forget about it. I mean, this is full accountability in real time every single day. So this was the short entry Monday morning, 33.89. Now, you might be thinking, well, isn't it risky trading a couple of handles off the high? Not when you have these pivots to lean against. See, for example, we wouldn't take a short position if there weren't any pivots here because we have nothing to lean against. But on that particular day, on Monday, we had a pivot right there. And so the idea of taking a trade leaning against these pivots is very quickly, in just a small amount of handles, if you're wrong. And that allows you to manage your risk. You always hear, risk, reward, risk, reward. Think of it the other way around, reward versus risk. If you have a trade entry and you keep seeing these things fail, so you have a short entry here, and you have a stop that's 3 or 4 handles away, where when you're wrong. Well, what is your reward to risk? Multiples of those 3 or 4 handles that you're risking. And here's another really important point, and if you've watched our videos before and you're tired of hearing me say this, it's really worth repeating. When folks begin trading, they tend to get obsessed with their winning percentage. What's the percentage of trades they entered that they were right versus percentage where they're wrong? That doesn't matter. It really doesn't. What matters is what is the number of handles you're booking on the cumulative trades that you're right versus the small amount that you're losing when you're wrong. It's all about risk management. You could be hypothetically right 50% of the time. But if when you're wrong, you're giving up a couple handles, and when you're right, you're getting moves like this. I mean, we were literally taking profits on this short on Monday that was entered at 33.89, literally right down into this. this orange proprietary algorithmic regression line. You don't. I love the fact that you don't have to guess where to take profits, because having done this for over 35 years, um, it used to drive me nuts. I would beat myself up about where to take profits, because even if it was profitable, I'd drive myself nuts about, how many handles did you leave on the table? Well, you can't do that because nobody's perfect. But what these pivots allow you to do is to take the guesswork and the mental frustration and anxiety out of it. Because if it goes through one pivot, it's going to go to another. The reason we have a lot of different types of pivots, like we have our Mercury band pivots, and we've got what we call our X5 pivots. We've got live pivots that are run at specific times during the day session. The reason we have all these different pivots, they all have a different reason, but it allows you to very precisely take profit. So here you have in 4 trading days, a short that was entered at 33.89, where again we were taking the profit in thirds. So you had a move that was 33.89 to 55, so that's 34 handles. That booked 69 handles in profit because, again, we're putting the trade on in thirds and legging out of it. So it's a perfect example of where the profit on the trade was more than the width of the move. And that's what you can do when you have this level of precise math in these algorithms. Now, I wanted to point out, today this level here between 72 and 76 broke very hard. And you can see that there's 1, 2, 3, 4, 5. There were 6 algorithmic pivots in that 4-handle range. Now, why were there so many pivots? Well, when we run the pivots, what they look for is areas where high volume, high turnover, where it looks for areas where there's a struggle in price. So here's the area we're talking about. Now watch what happens when we pull this chart back. And again, we're talking about 72 to 76. Imagine all the volume that occurred here, 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 and here. You have a massive amount of volume, and that's why, and again, you just see how these pivots cut right through that. In other words, if you've ever seen software that'll take the volume and put it on the vertical axis, so you see little peaks that look like mountain ranges, I never look at that because I don't need to. It's just something, it'd be one other thing to clutter up the charts. I don't need to look at it because our algorithms find where those peaks in volume are. And any of you that are watching this that have software that shows you that, take a look at the volume. I guarantee you've got an HVN right here in this area, 72 to 76. I don't need to have that extra stuff on the chart. We don't need to. So when these algorithms are run, they find those HVNs. Some people call it high value node. Some people call it high volume node. It means the same thing. But those are areas where price is magnetized to until it breaks. And because, for example, if you've got, imagine those little mountain peaks, and then you got this big one here, and you got a ton of volume here. What happens when that breaks? Boom, and it goes both ways, up and down. But when those HVNs, those high volume nodes or high value nodes, however you care to refer to it, when they break, you get this. And the thing is, when you have the combination of our algorithm that moves through the charts and tells you when the bias is long versus short, when you have the combination of that and these fixed points, it allows you to get in. And we've done this twice this week. We did this on Monday, and we did it again today. And if you go on our again on our website, this is exactly as it appeared for our subscribers. And also on our live chart, I'm on the mic all day long. So if you're new to trading, we'll help accelerate the learning curve and teach you what the pros know very quickly. But this is all on the website. This is the trade narrative for today. And this is the trade narrative for the other day, for Monday. It's all there. And again, like I said earlier, anybody tries to sell you anything and they can't show you that, well, the first question is why? Why can't they? And secondly, if there wasn't any accountability in the past, meaning that they don't document this stuff every day, well, how can there be accountability in the future? You don't know what you're buying. Now, Another thing that's nice about our system is there's no software to buy. Everything runs off a live chart. All you need is a free Zoom account. You subscribe to our service, you get the live chart, you get the Slack channel. We've got two different services. We've got ES and NQ, that's one service. And then we've got a separate one for bonds and crude oil. I want to talk about bonds a little bit because I really don't spend as much time as I should. I don't understand why more people that trade index futures like ES don't trade bonds. With the volatility that we have in the bond market, you can trade the tar out of bonds, and I'm talking about day trading. And that, day trading bonds is something that seems really foreign, because we think of bonds as a long-term investment. But and let's go ahead and take a look at it. Let's go back over here, and let's take a look at bonds. Now, in the algo, you're going to get some choppiness. And actually, I don't have the algo on this particular screen. Let's go back over here. Whenever you have a big run, you're going to get some choppiness. Now, here's how you deal with choppiness. It comes from the combination of our algo, which gives you the long or short bias. But you combine that algo that tells you, when it's best to go long versus short, with these horizontal pivots. So when you get in a trade, let's say you're in a long trade, which triggered down in here, look at all these horizontal lines that you have at which to take incremental profits along the way. So you had a long position or a long trade that was right in here. Well, count the lines. 1, 2, 3, 4, 5, 6, 7. 7 opportunities to take profits. So if you're trading one lot, it's a binary decision. Either you take profits or you let it ride. But if your account's large enough that you can properly manage risk, yet still have multiple contracts on, well, then it's the same concept as the ES. Let's say you're you have to have an account large enough. Trading 3 contracts doesn't mean that's the max that your broker will let you. If the max you can put on is 3, then you don't trade 3. That's too big a position. But let's say you have an account that's large enough that you could trade a 3 lot of bonds. Well, then what happens is, again, you got this short entry right down here, which was like 162.8, 162.9. And so, especially when you've had a big run like bonds have had, then you have to take incremental profits more quickly. The more volatile the market is, the more quickly that you take profits. But still, you have 1, 2, 3, 4 between the trade entry down here, 162, call it 162.10, whatever. You had all these opportunities to take profits as it moved up to 163.16. Now, all of our systems give you a daily algo bull bear pivot. They give you a midday pivot, which comes out between 12 and 12:30, towards the latter part of that 30-minute window. You've got the X5 pivot, you have the Mercury band, so there's all of these proprietary algorithmic metrics that you have to take profits. Now, again, you've got some choppiness in bonds because it's run so long, but the bond algo has been long since 157.12, and then there's times in there where it's going to flip short and get back long again. But what it doesn't do is, let's say it has you long, it's not going to figure out at a higher price that it's wrong, and I said that backwards. Let's say you were short here. Let's say the algo triggered short. It's not going to find out it's wrong and get you long at a higher price and eat that difference. If it's long, it's going to flip short at a higher price. If it's short, it's going to flip long at a lower price. And the only way that you can do that consistently is to have algorithms that are linked to time. Because if you write an algorithm that's just based on price, it's going to chop you up. And there's times, for example, where you'll be short and then it gets you long at a higher price. Well, that doesn't do you any good. So, if you pull bonds back about 5 weeks, you'll see where it got long, and it may not be exactly 5 weeks. I have to go back and look at the chart, but it originally started having a predominantly long bias back at 157.12. And there's been periods in there where it's gotten short and then got long again lower. But when I said earlier that I don't understand why more traders don't trade bonds, because you can trade bonds just like ES. I don't know why more traders don't do it, because bonds trend better. You can't manipulate the bond market the way the ES futures market can be manipulated. I mean, you've got 4 stocks, Apple, Microsoft, Google, and Amazon, that account for a crazy percentage. What is it, up to like 14%? Well, it used to be if you wanted to move the market around, you'd run a buy program on either the entire S&P 500 or a big chunk of it. Well, now all they have to do is arbitrage the market higher just by what they do with Apple or Microsoft. So literally, there's 3 ways that you can have buy programs. You can run a traditional buy program on the S&P 500, or you can arbitrage Apple or Microsoft or some combination thereof. But we could see this thing coming today. You had a down open, and you had a buy program right off the bat. And when it got up in here, we could see that tailing off. Everybody calls it something different. You've got buy programs that are initiative type programs where they're building positions to take the market higher over time. Then what you have, what I call cappers, where it's a buy program for the purpose of buying them to sell them. And it was so blatantly obvious today that buy program was a capper just to get price off that low this morning, get it up higher in order to sell it. So what they were doing today is the institutions were buying them to sell them. And you see the opposite too. Remember some of those big spikes down where they were selling them to buy them. That's the way it works. As I mention our subscribers almost every day, look, is it fair? Doesn't matter whether it's fair. It's their casino. They get to make the rules. And when I say their casino, by they, I don't mean anything conspiratorially. But if you're a big institution or a big hedge fund, and you're running billions of dollars, guess what? You get to have more say than you and I have. It's just the way it works. So I don't know how anybody trades these markets without having the same type of mathematical edge that the institutions have. Because look, bottom line is that's who you're competing with. And if you don't know what they're doing and you can't see the same things that they're looking at, because they're using the same type of time price algorithms we have here, I just don't know how you trade. If you're trying to trade competing against these institutions that have these overwhelming mathematical, statistical, analytical advantages over you as an individual trader, how are you going to compete with them? They're just going to pick your pocket every day. They're going to run your stops when you're short. They're going to run your stops up here. When you're long, they're going to run your stops down here. Well, we know where that stuff resides because we have these pivots. So depending on what we get in Globex, there may be another video tonight. But if there is, and we thank you so much for your time. If you haven't been to our website, it's mercurysignals.com. Do we have it on here someplace? There we go. mercurysignals.com. And the way our subscription works, there is no software to buy. You pay a subscription fee that gives you the live chart. It gives you the Slack channel. It gives you the mentoring, which is me calling the tape all day long. I've been doing this for 35 years. We teach risk management, I think, as good as anybody, and that's the most important thing in trading. You can trade long, you can trade short. You cannot trade without good risk management for any period of time. But the way our subscription works, we don't bill monthly, we bill biweekly. So you're never committed to anything more than 2 weeks. And as a business model, it's one of the dumbest things you could ever do as a business model. But we do that because we want to give you flexibility. B, we know these systems work. And as a sign of good faith or show of good faith, we're not locking you in a month at a time. Now, also, we give you a rate lock. The way the rate lock works, it means that your rates aren't going to go up. No matter if you're a subscriber, it doesn't matter what the rates go to in the future. You get a lifetime rate lock from the time that you join us. And so, if you're interested in trying out one of our subscriptions, it's 2 weeks at a time. And this particular trade on Monday booked 69 handles, and the trade today booked short trade. I'm going the wrong way. I actually meant to go to the website. Forgive me. The short trade on Monday was 69 handles, and today was 67 handles. What is our subscription cost? If you trade ES, if you trade the mini, the mini is $50 a handle. It costs you less than 1.5 handles a week, $68 a week, billed bi-weekly. 67 handles today, 69 on Monday. Now, let me just say this, disclosure. Past performance is not indicative of future results. We're not implying in any way that a typical trade is 69 or 67 handles. However, those types of things can happen when you're properly prepared. Futures trading involves substantial risk. Futures trading with leverage involves even greater substantial risk. So you have to know your risk. You have to know whether futures trading is appropriate for your account and risk and your life situation, your family's situation. Those are all things that go without saying. But for what we give you, a little over a handle, an ES E-mini handle a week, is a ridiculous bargain. And I will say this, and I don't mean this in a salesy sort of way, the rates are going up soon. So if you're interested in checking out our service, either the ESNQ or the bonds crude oil, rates will be going up very soon, and you do get a lifetime rate lock. So with that, thank you so much for your time. We appreciate your time. Those of you that have been watching these videos regularly, but thank you for your time. God bless you. God bless your family. And we hope to see you again soon.